Hey Greg, this is Ryan with TrendLizard.com. I want to thank you for signing up at TrendLizard. If you have any questions that come up as you kind of look around our website and figure out what's going on with the Elliott wave theory, please feel free to ask me. That's what I'm here for. Thanks for the email. I'm going to take a look at two stocks for you today: KLAC, KLA Corporation, and TRU, TransUnion. So we're going to take a look at them from all time frames, starting in the very long-term time frame since their inception, and then just drill in from there to figure out where they are in their Elliott wave patterns and what it means as they head forward. So first up is KLAC. It was incepted back in 1990, and it's only done two types of patterns on the long-term time frame. It's given us trendy five-wave advances to the upside like it did here in the 90s, and again in the alpha the 2008 low here that is still in play, and then also a counter trend three-wave pullback that has separated those moves. So on a very long-term time frame, it remains bullish because, as we know, trends play out in five waves and counter trend moves play out in ABC three-wave moves. So in that respect, the trend is up. So our concern obviously is what has happened off the 2009 low, and the concern is once you get a completed five-wave move on any time frame, but definitely on this large long-term time frame, price reverses and heads the other direction, as you can see. As happened back in 2000. After it completed this five-wave move there, it gave us a very large, almost decade-long three-wave pullback. So when this five-wave move completes to the upside off the 2008 low, it's going to usher in a very large change in trend to down as a much larger counter trend pullback plays out. So let's go ahead and zoom in on this action off the 2008 low. This takes a closer look at that five-wave advance. It subdivides very nicely into five-wave moves. As you know, every move that happens in the direction of the trend should play out in five waves itself, as each one of these moves did here. So currently we have ourselves in the fifth wave of that over decade-long advance. So that's a concern. It seems like it's in the later parts of this very large advance. It's not over yet, but it's getting closer. So let's continue to drive in and take a little bit closer look at what's happened off the 2020 low. Here is that advance. Again, every up leg is taking a nice five-wave move, and every pullback is taking a three-wave move, which makes us confident that the trend is still up. But again, the problem is once that larger five-wave advance completes off the 2008 low, we'll be looking at a larger pullback. So essentially, when this advance off of the March 2020 low becomes a five-wave move, as shown in blue, then we have to start worrying about a much bigger high. For now, the trend is still up. It appears that we are starting a fourth wave pullback in January here. You can see again off of March's low, looks like a first wave, a second wave pullback in August and September, a very clear five-wave move for wave 3, and then that larger fourth wave pullback, which does not appear complete yet. I think we'll get additional weakness in the near-term time frame. We have our eyes on this yellow support area here, runs from about 220 to 260. It should ultimately take a three-wave form before it completes, and then price should turn up to give us that fifth wave advance. So on a very near-term time frame, it looks like we're going to head a little bit lower as that larger counter trend pullback plays out. On the midterm time frame, we'll expect that to find support somewhere in the yellow area and turn higher again. But then again, let's zoom back out onto the long-term time frame. Once this five-wave move completes, I think it's going to be time to sell and get the heck away from KLAC, because at that point you're going to expect a much larger pullback. If we zoom in on the very short-term time frame here, let me dial that in here. What we see is this downside action in January appears to be a five-wave move to the downside. So if we step this out again, this action here appears to be a five-wave move to the downside. So that's a good reason to think that it is not yet over. This pullback that's began in January, it's probably wave A of a larger ABC pullback. So that's another reason to think that this fourth wave pullback that's begun in January has not quite run its course yet. So again, expect some lower prices into this yellow support area. As long as it stays above 220, it's going to remain bullish, and we're going to expect a larger advance off that 2020 low. But on a larger time frame, once you get one more five-wave advance to the upside, we have to be on guard for a much more important high. So there is KLAC. Let's go ahead and take a look at TransUnion now. So here's a look at that chart. I need to recalibrate here and get my chart centered. There we go. So this is TransUnion. Since its inception back in 2015, it's given us one move largely in its lifespan, and that is a very large, very nice 5-wave advance. Now that 5-wave advance completed in early 2020, and that gave way to a very large sharp pullback like so many things did in February and March of 2020. Since then, it has recovered. It retested the high and then has found some resistance there and is starting to pull back. So we know on a long-term time frame this guy is bullish, right? The trend is happening to the upside. We know that because we're seeing 5-wave moves to the upside. Additionally, we know that the 2020 pullback is a counter-trend move because you have the sharp down move and it's retraced the high or retested the high. So that means that whatever is going on here is a counter-trend move. The only question that we have to answer is this counter-trend pullback complete, or is it going to retest that low before it turns higher again? So let's zoom in and I'll tell you why we think it is not yet complete. If we take a look at that decline in early 2020, that down leg looks like a 5-wave move to me. Not only that, if we look at the advance off of March's low, it looks like a 3-wave move at this point, and it's found resistance right where you would expect it to if this was going to give us a larger counter-trend pullback off that 2020 high. If that's the case, it's obviously fairly bearish news because that would point TRU all the way back down to the 2020 low in a larger ABC pullback before this completes. Now, there is another take on this that may be a little less bearish, and I'll show that to you now. I guess one possibility to consider is that pullback in early 2020 was a 3-wave move. Everything since has been the start of a larger advance, as labeled here. Not as confident in this labeling, but nevertheless, it too points to lower levels before it heads higher. Under this under this labeling here, it would point back to October's low as you get that larger ABC pullback, and then you'd start getting that strength again as a larger advance forms. It's possible. I think basically you just need to see how it plays out. Right now, I think it's going to head lower. Everything we're looking at either under a larger ABC pullback off the 2020 high or a larger ABC pullback off of the June high that was recorded here. Either way, it should head it lower, either back to October's low with the potential to head back to March's low. Obviously, a big difference. The only way we're going to be able to tell the difference is when price turns higher, as is the pullback that we're seeing off this December's high. Doesn't look like a completed pattern, but it does show trendy potential to the downside. So this is another reason that I think it's going to head lower from here. Again, either back to October's low, if not lower. If at any point it reverses higher and moves above 97, that's going to kind of give you more hope that a low is in and that it's ready to head higher. As is, I think it has plans on heading lower before it heads higher, and that entails a move back to October's low, potentially even lower, if it wants to go back to March's low. So as long as we're seeing trendy action to the downside in 2021, I wouldn't touch it. I think it looks like a problem. Once you start seeing a reversal up, seeing some strength, you can consider the possibility that maybe it's this labeling that's going on here, that we're just getting an ABC pullback off of June's high, and that price is ready to turn higher. So I hope that's helpful, Greg. You do have one more ticker that I can take a look for you if you want. We do 3 a month for you as a pro-level subscriber at TrendLizard.com. Either way, I hope that's helpful. Again, thanks for signing up at TrendLizard, and let me know if you have any questions as you go. Have a great rest of your weekend. We'll talk to you again very soon. Take care.